See that? Buy limit. I literally called the trade right here. And it came down once, pushed up, hit take profit target. It came down a second time to the same entry. And then it pushed up and up, hit take profit target. 1, 2. It actually went up and hit take profit target 3. So this trade actually went up for more than 900 points on this index here. And in fact, if you're still in the trade, you'll still be in profit right now. And you know, these are the types of trades that really like. Did I lose? Are you still seeing my screen?
Yeah.
Okay, cool. Because I'm not seeing the shared screen thing. Okay. Yeah, so these are the types of trades and trade setups that I like, because you hold it comfortably. And like this was a Friday. Well, in fact, I called it like a Thursday. It came Friday, and then it took about Monday, Tuesday, Wednesday. So you hold on to the trades for a couple of days, and you're not in and out of the market, all the time. Now, being in and out of the market all the time, every time you jump in and out of the market, there's another risk to take. So you want to be able to take a trade that you don't have to jump in and out of the market all the time. But you know, that's scalping for you if you're scalping. But I'm not scalping. I'm sending trades that you'll hold on to for a day or 2 or 3, or for the rest of the week. All right. What I'm really trying to do is I'm trying to catch the weekly range. So you know, how much would this currency pair move this week? And I'm trying to catch the majority of that move, whether it be for 3 days or 4 days or 2 days. You know, it depends. And all of that has to come down to timing the market appropriately. You know, understanding where the true trend of your market is, and you know, is I can't teach. Is difficult to explain it all on this one call, but these are some of the things that we really have to keep in mind when we're starting to look at the markets. Where is the true trend of the market? We want to trade with the trend, because the trend is your friend, right? Until the end, of course. But swim with the tide. Okay, so let's see as best we could swim with the tide. Like, for example, if I'm taking a harmonic scanner trade, I'm not taking any harmonic scanner trades that are against the market, against the trend of the market. So I'll give you an example of a harmonic scanner trade that actually worked out quite nicely today. So the harmonic scanner is actually really good once you establish your rules of, hey, I'm not going to take any trades against the trend of the market. Which one was it? Oh, in fact, here's what. We actually have a nice trading opportunity right here on this GBP NZD. Now you see the trend of the market is an upward one right here. And the harmonic scan is calling for a buy. You more than likely, this harmonic scan will actually work out because it's going in line with the trend of the market. And personally, I like to take trades off of what we call supply and demand zones. If you've never seen or heard of supply and demand zones before, you could actually go to my advanced channel and you could check out the video that I've done there on supply and demand zones. But for the sheer fact that this is going in line with the trend of the market, and we probably may have missed a little bit of a move, yeah, I would be more than happy to take this trade. Probably just have my stop loss below these lows right here, and that should, in theory, work out. Okay, so this GBP NZD. Nice. NZD USD. So let's see here. So this was a bit of sideways movement on this NZD USD. But yeah, this one is not as clear cut because we had this uptrend and then sideways movement. So I mean, with that, there is potential to take this trade for the sell, but it's not as high probability as that GBP NZD. Okay, so we have NZD JPY, and you notice I'm looking at the 1 hour chart, right? We had, again, a lot of sideways movement on this NZD JPY, but this for me is definitely a trade to take. In fact, I think I actually marked that up last night. Let me just have a look. NZD JPY. I think I marked that up on my session. Oh, you know what? I don't have a session today. I only have a session on Tuesdays and Thursdays. So there you go. Funny. I thought I had a session at 7:15 today, so I could stay on for a little bit longer. Okay, so nah, that wasn't the one that we were looking at. That wasn't the one that we were looking at. So trades like this one, where we had upward movement, a bit of sideways movement, and then it was calling for a sell here. I wouldn't necessarily want to take it, or if I am taking it because it's just sideways movement, I'll take it for a shorter period of time. GBP CAD. Yeah, GBP CAD was one that we looked at last night. Beautiful, beautiful. Right, so we were saying, all right, let's take that sell on GBP CAD right here. And this is our first take profit target. That was all based on the harmonic scan. Okay, that was based on this harmonic scan right here. So it came up nicely into our zone, supply and demand zone. And if you look at the video that I shared on supply and demand, you will understand why I marked this off as a supply and demand zone for potential for reversal right here. So this was the trade setup that we looked at last night, and you could see that we're in profit right now. It's almost at our take profit target of almost 100 pips. Okay, almost 100 pips there. So with this trading is really choosing your battles well. Okay, how do we choose our battles well? There's another harmonic scan that I was looking at, which I sent out a trade on today and is in profit right now. I believe it was USD JPY. This one, okay, USD JPY. Now you notice here that price has actually pushed past entry, come down to the stop loss. When it comes to the harmonic scan, don't worry about where it tells you where the entry price is or where the stop loss is. You figure that out for yourself. Don't take it from the harmonic scan. So what do I mean by that? Well, what you should be doing is, again, looking for your supply and demand zones, because those are the zones that your price is more likely to reverse from. Okay, so right here, we were looking at this last night. I've marked off my supply and demand zone here. We could see price came down and had a bit of a fake out below. But last night, this happened and we came in again for the buy. In fact, I sent it out on the Index Infusion today. So right? And this is all about timing your entries. Now you see how perfectly that entry was timed. So as soon as it came down to this level, sent out the buy and boom, we were in profit almost instantly. Now, it doesn't happen like that all the time, right? But we try our best to, or I try my best to time the entries properly. So at the moment is in just about 30 pips of profit, something like that. When we get into 30 pips of profit, generally when it hits take profit target 1, that is when I would move my stop loss into profit. We take some money off of the table, and then we leave it to go. Some people are just happy to see take profit 1 through and then take all their money off the table. Cool.
Mute start video participants chat share screen.
If you're able to hold your trades a bit longer, that is definitely a plus. But then that comes with a little time. It comes with a little understanding or more trust of the market, right? So that is just Index Infusion in a nutshell. And I'm just giving you a little bit of the thought process that I'm going through when I'm looking for some trade setups or trading opportunities. Let me know whether anybody has any questions. I'll take some questions.
Yeah, there are a couple of questions. I think you can see them. Number 1 is, what is your criteria in identifying high probability, low risk trades?
Right. So it would be supply and demand zones. Okay. So I'm looking at my supply. Ooh, look at that. That USD JPY is almost at our take profit target, man. It is almost at our take profit target. Hold on, let me just refresh this one. USD JPY. It just had a, okay. But on this side, it seemed to have had a nice push to the upside, and is almost, or take profit target is at 1.060. So it's almost there. It's almost there. Trade, I'm looking to see where the trend of the market is. Now, how do you identify the trend of the market? Well, you look at your daily minimum, your daily time frame, to get an example of where the trend of your market is. Now, it is, you know, quite tricky on this USD JPY, quite choppy. But when we look at our lows here, and then we look at the high that was formed on a daily, and then we look at the low that was formed here, right? So we have a low, a high, a higher low, and then we had a higher high. So for me, it's telling me that, you know what, this market is looking like it wants to start trending upwards. Now we're seeing a little pullback here on the daily, 3 days back, but I'm telling myself, I believe that this USD JPY now wants to start pushing up. Then the next thing I want to do is identify. So I want to know where the trend of my market is. So for me, I've identified that it's up. On this USD JPY is up. We're experiencing a little bit of a pullback here. The next thing I want to do is identify my supply and demand zone. And if you look at that supply and demand zone video, you would understand why I was looking at this area here as a potential for price to come into as a supply and demand zone and then push up. The next thing I'm looking for is for price to come down into my supply and demand zone and then reject off of it, which it did. Okay, let's erase this one. I'll go down to a lower time frame, but I'm looking at this on direction on the daily. I'm looking now at my supply and demand zone on a 4-hour time frame, and so that's identified. It's pushed and rejected away. So I've got a price coming down into my supply and demand zone here, and then it pushed away and rejected off of that, and the price is closed on the 4-hour time frame. It's closed. Then now all I'm just looking for is, okay, I've got that confirmation, got the rejection out of that. Now I'm looking for an entry. What is the best price to enter at for a buy? Now, notice I didn't jump in just yet, okay? Because I'm now trying to time the trade. Now I'm thinking to myself, what are the trading sessions that would see this currency pair move in a specific way? And it would be either the US session because it has the US in it, or it would be the Asian session because it has the JPY in it. It would hardly ever be the London session. And so if you notice here, during the London session today, this whole thing just did a pullback. It did a pullback, right? And then in the US session, when I saw that the US session was about to start, then I start asking myself at what price this could take off from in the US session. Now, to be able to get the timing of the markets, yeah, it is a bit of a, there's a knack to it, but eventually you'll get it. Look at this, beautiful, beautiful move. So I started narrowing down now my entry entry price. I'm starting to zoom in now and look what is a good entry price. Now, based on how price had come up into my zone here before on the 4-hour chart and then gave me that rejection. 2 seconds. My mother is calling me. Mommy, I'll call you back, okay? I'll call you back. All right, bye. There we go. My mom in the Caribbean. I think I need to plug in here. 2 seconds. 2 seconds. Okay, yeah. So now it was a matter of timing the entry. I've already established, right, I've got the signal that I really want to buy this thing. I didn't jump in just yet. I'm just waiting now for prices now retracing during the London session. I could see it's dropping, it's dropping, it's dropping. Now, the harmonic scan did give me an inclination that it was gonna buy. Now I'm just timing my buy. And if we just zoom down here on the smaller time frame, on the 1 hour time frame, we actually have a supply and demand zone just in this area right here. And you would notice the price that I called the trade at was at 105.250. That is what is called a quarter point level. Quarter points is a whole different topic, all right? But basically is every 25 pips, we have minor quarter points. So I usually try to round my entry to these quarter point levels. So this is why I know off the top of my head exactly what price I entered at, right? People don't look at price either, right? They look at all sorts of indicators and all this and all that. Price is the most important indicator, right? Supply and demand zone, price for me, and that's all I'm looking at. You notice I don't have any other indicators here. I don't use any other indicators. There we go. So this was my entry price right there, okay? A stop loss was beneath here, as you can see from the Vibrata setup, right? There we go. So I had a bit of a wider stop loss, but again, it was at a quarter point level, and you could see all these take profit targets here are actually quarter point levels as well. Quarter points, again, that's a totally different topic. I actually covered that topic in 2018 November. So if you can find those videos, They actually should be in the go live session. So November 2018, I did a whole series on quarter point. Okay. So I was saying, I'm waiting for price in the New York session to come down to this price right here, and then we want to buy that thing. And well, it actually triggered just before the New York session, right? But you could see here that the whole move is actually being made during the New York session. Okay, so the New York session starts at in my time 1:30, but this whole move here is made during the New York session. So if you took that trade, boom, 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 you're up some nice pips, and it should hit take profit target at 75 pips. 4 pips away. We literally 4 pips away from take profit target, right? So I know some people is like, well, I see my profits, I'm taking that profits, and I'm gone, I'm running. That reminds me of me when I first started. But we always progress. So we leave it. Once it takes profit target, move your stop loss into profit, and we just let it continue going, right? Let it continue going and try to hold on to that trade as long as you can so that you could make as much money as you can from the one trade rather than having to jump back into the market to try and make money again from the trade. So there we go. Right, so that was a long explanation of the criteria. But again, I'm just sharing the thought process that I actually go through to try and get as precise an entry as possible. And notwithstanding, I am not thinking that I'm going to win this trade. All I'm just thinking is, okay, it's a high probability, and I'm going to risk 1 to 2% on the trade, and then that's it. So I'm not necessarily thinking that I'm going to win or lose the trade. I'm going to take the trade, and I'm going to risk 1 to 2%, and let's see how it goes. And that's it.
Okay, there are a couple of questions. Where can I get the video on supply and demand?
So it's in my advanced section on the favorites. My advanced channel on the favorites.
Okay, the next one, what is your typical stop loss limit?
Well, it depends, right? It depends on my entry, but what I'm looking for is like previous lows, previous highs. I'll put my stop loss above previous lows or previous highs. So it's not a specific like pip amount per se, but when it comes to the risk percentage, you know, that will remain at 1 to 2% of your account.
Okay, and then
the risk to reward, the risk is always smaller than the reward.
Okay, I think you've partly answered the fourth question. Could you go over your risk management rules, specifically risk to reward calculation?
Okay, so yeah, risk management simply, I'm just chosen to risk 1 to 2% of my account, right? That's it. So I have a fixed percentage that I want to risk. Now, when you come to your calculation here, this is important. If you go to myfxbook.com and you go to Forex calculators here, then you go to position size calculator, you should have this here as your friend. So say, for example, you're trading in US currencies and your account size is 1,000. You're risking, you've already established what your risk percentage is going to be, 1 or 2%. In this case, let's say it's 2%, okay? Now, your stop loss will vary. It depends on the setup, it depends on the currency pair, you know, many different factors that will dictate how large your stop loss is going to be, right? But based on your based on your entry and how wide your supply and demand zone is and all that. So in this example, let's say your stop loss is 40 pips and you're trading Euro USD. If we hit calculate, it will give you what the lot sizing should be in terms of your risk percentage on this trade. Risking 2%, you're trading Euro USD, your stop loss is 40 pips. This is what your lot size should be, okay? If your stop loss was 50 pips, for example, and you hit calculate, then you see that your lot sizes, your lot sizing gets a little smaller, but your risk in terms of the amount of money that you're putting on the trade remains the same. To get your lot sizing bigger with the same amount of risk, all you need to do is to make sure that you have a smaller stop loss, which basically means making sure that your entries are really, really tight. And like say, for example, this USD JPY, I could have actually given a smaller stop loss on that, right? So say, for example, in this position, I could have actually given a stop loss that was just below this low right here, which would have been about 18 pips. So round it up to 20 pips. So if I do that on the position size calculator, 20 pips, and I choose Euro USD JPY, you would see what happens with the stop loss, with the lot sizing, right? So all of a sudden, I'm risking the same amount, but my lot size has basically doubled, right? With the same amount of risk. So the smaller that you can get your lot size to be, the better it is. I'm sorry, the smaller you can get your stop loss to be, the better it is to be able to get a larger lot sizing. So, you don't have to choose random lot sizes. You do a proper calculation like this for your percentage and how much you're actually gonna risk on the trade. And this is a better way of approaching your risk management.
Awesome. And then there's another question. Doesn't holding trades for long require a lot of babysitting?
No, you just look at your food and see. It's like, oh, okay, that's cool, and then you go. Just move your stop loss into profit and leave it to do what it's doing, right? Look, like say for example, like this same trade right here, right? Yeah, I'm not looking at it after I've taken it today. Is almost at take profit target one. The only thing I'm doing, the only babysitting I'm doing is moving my stop loss into profit here. So I know that is now risk free. I don't need to take that trade again. I don't need to worry about it again. I'm not going to lose anything on it. So all you just do is like look at your phone or your trading app and see, all right, yeah, it's going good. All right, cool. And then that's it. Somebody just texted me to say that one of the trades that we sent out there is taken off again. Euro AUD. Let's check that out. Euro AUD has taken off. Okay. So this was a setup from, yeah, we had that push up and we got stopped out in profit, but I know some people jumped back in because it came a little bit lower down and tested another supply and demand zone down here, then it's pushing up. So this Euro AUD is still good for the buy in my opinion. But I wouldn't say now is a good time to buy. A better time to buy was when it pushed up and retested this zone down here. And then that was a better time to buy. But there we go. Okay, any more questions?
Could I ask?
Sure.
Where can we access maybe do you have favorite videos in your channel, and is it in advanced or is it on Vibrata?
Yes. So if you go in the advanced channel and you click on like my advanced go live channel. So let me show you actually. So if we go back to the your center here, I am center. And you go to go live. And you go FRX for Forex. And in the advanced section, my channel is right at the very bottom, right at the very bottom here. So we just click there. And if you go under favorite sessions, that's it, favorite sessions, you'll see supply and demand zone here. So that's definitely one to look at. Okay, trust that helps.
Very good, thank you.
You're welcome. Any further questions? Okay, seems like everybody is okay.
Awesome. I just want to ask one more time. Does anyone have any pending question before we wrap up? We're 1 minute to 9:30, so I think we're good to go. Anyone with a question? Comment? Yes.
Let me ask.
Yes, Jeremiah, go ahead.
Are there any specific times we should be looking out for your trade signals on the infusion?
No specific times per se. I would generally say usually near the beginning of a session being started. So usually at the beginning of the London session or at the beginning of the New York session. Or at least getting close to the beginning of the New York session. So it could be at the beginning and end of the London session or the beginning of the New York session. I think those are the times that I generally would send out trade ideas.
Awesome. There's one more question I see that's in the chat. Do you need a big account size to hold a trade for long?
No, just make sure that you don't do a massive lot size. You know,
what's the minimum?
Keep within your lot size.
What's the minimum you can recommend?
For what?
For an intraday trader to start with.
To start with?
Yeah.
I mean, to be fair, the larger you could start with, the better. But you know, if you don't have that much capital to begin with, if you could start with like 500 US, that would be good. Again, some people can't start with 500 US. Some people could start with say 200 US, 300 US. So if you could start with, if you could start with 500, 1,000, that will be fine. But you know, the larger you could start with, the better it is for you.
And then Joyce has made a comment that
Yep.
you haven't really said much about trading indices.
Oh yeah. So I just kind of briefly mentioned like US30, but the principle of trading the indices remains the same, right? I'm looking for where's the direction of the indice. I'm looking to see where my supply and demand zone is. I'm looking to figure out what session am I in, where I could potentially see a little bit of a pullback into my supply and demand zone. I'm looking to see what news items are coming. So, you know, the news could move the market in a specific way. So there's many things that are going through my head when it comes to, you know, getting a good entry on the indices. And that US 30 trade that we mentioned there last week, you know, that was the only trade that I had to take that week. You know, you don't need to overtrade. You really don't. You don't even need to trade every day to be profitable. And that's one of the lessons that I had to learn, you know, the hard way. Like every day trying to find something, every day trying to ask something of the market. And sometimes the market just ain't moving, right? Like US 30 right now, if you look at US 30 right now, is not going anywhere. But if you caught that US 30 from last week or the week before, you know, that was the trade. So I'll show you what I mean. Right? So US 30, we caught US 30 from way down here and caught it all the way up to these highs. Right. And I literally let it go at that high, but price continued going for basically almost the same amount. So we could have caught about 1,800 points on this one.
We can't see your screen.
Oh, you can't. Oh, sorry. Yeah, I stopped sharing. Let me go again. Sorry. There we go. So yeah. So this US 30, we caught this US 30 that trade setup, we caught it way down here. And we literally let go or came out of the trade, right, up here. Now, I'm sorry, not even so far up. Okay. So this was the move, let go of the trade just around here. Now it went up another 100 and something points. And then you could see there's no major movements at all happening on US 30 for the last 8 days or so. It's just up and down, up and down, up and down. For the last 8 days, it's just nothing. So I haven't even looked at that. I'm looking for a buy on US 30, but I wanted to get to a price that I want to buy it at, you know. So all I'm doing here is now just waiting. I'm just waiting on this US 30. Whether it comes back down to this level or if it drops back to this level, then I'm starting to look for potential buying opportunity again. Until then, I don't want to do it. I'm not doing anything, right? So one of the things in trading is that you have to know when to sit on your hands and just wait. Yeah, you know, the patience game is important in trading. So you can't just be jumping in and jumping out of the market. Because
there's some last minute questions. What do you consider when placing your TPs after your entry?
Right, so you could use, for your take profit targets, you could use like support and resistance levels. You could potentially use Fibonacci as well, but the simplest thing to do is just go from your supply and demand zone, or if you know your supply and demand zones, you could go from one supply and demand zone to the next supply and demand zone, or you could go from supply and demand zone to support and resistance level. So those two are more than enough for setting your targets.
Okay, and there's another one. On an account of $1,000, did you say you take a risk of 1 to 2% per trade?
Yeah, just 1 to 2%. Doesn't matter what account size you have.
Okay.
It could be 1 million, it could be 100.
So how many trades can someone take at a go?
Well, I would say in terms of your risk or your overall risk, in terms of the amount of trades that you have open, don't have more than say 10% of your account at risk at one point. So say, for example, you risk 2% on a trade, and then you take another trade and you have that's another 2% risk. So that's 4%. You could take another trade that's 6%. You take another that's 8%. So don't take like more than 5 trades at a time.
Okay.
Yeah.
Okay, I think that's it for today. I think that was the last question. So I think I just wanted to say thank you. We can come to an end now, but thank you so much, Bale, for, on short notice, making it on this call. Really appreciate it. We've learned a lot. I've learned something today. And I just want people to acknowledge you on the call. I know they're writing their thank yous. I hope you can see them. We appreciate you. Especially the Kenyans here. We've been looking forward to this call since yesterday. So really, really appreciate it. And I can see some guys from the US as well. Thank you guys for tuning in. Yeah, so hopefully we'll see you guys in the academy. Go to the back office, get into your go live, start, going into the videos that Bale has done. There's a wealth of information, to be honest, there. I myself, even this year, have been learning from Bale, and his videos on entries are phenomenal. When he talks about supply and demand, he knows what he's talking about. So guys, please let's take advantage of our academy. And then I wanted to mention, yes, so the Index Infusion product is an add-on. I just want to mention it again. You pay an extra $10, okay, onto your Vibrata subscription. But guys, it is worth it. If you follow, our Vibrata Facebook group, I'm sure you see every single day, Bale has posted TP hit, 60 pips, 50 pips, and so on and so forth. So please take advantage of our products, explore and learn. So once again, Bale, thank you very much. We'll see you soon. And for everyone, thank you guys. Have a lovely, lovely evening. Thank you. Bye.
Bless you guys. Bye-bye.